Let me just get your first read of these numbers.
Good morning, Heidi. So we are just getting the numbers of the top line and the bottom lines for Samsung now, and we're seeing the miss from Samsung Semiconductor division, which is the largest, and it was expected to post more than 11 trillion won in operating profit. Results show it just posted slightly lower than 10 trillion won in operating profit, and its smartphone business also posted a miss, much lower than what was expected in the market. Now, earlier this month, when Samsung gave its guidance for the second quarter results, it showed that more than 20% growth in its sales, whereas its operating profit show among the slowest quarterly growth in recent years. That's been the story of a lot of companies in South Korea, which is exporting their goods, and they got this currency-related gain for their top line revenue growth, whereas the operating profit anytime shown a miss from the expectations because of the growing costs and slower demand around the world.
And what are we seeing in terms of Samsung's performance with partnerships and other businesses? Because we had heard that perhaps they're extending partnerships with Qualcomm as well. So is there some upside in the fact that although they are seeing some cost pressures, like you mentioned, there might be some other opportunities for growth out there?
So that's one area that investors are very keen because Samsung's founder business, which recently said they have started production based on this advanced 3-nanometer technology, was seen as one of the key future growth area when they first started the business, but it hasn't really delivered what investor has been expecting. So Samsung is under huge pressure having to expand their clients for their founder business, which they aim to grow as big as TSMC, which is the biggest foundry company in the world. But that hasn't really happened. And now when the earnings conference call starts, investor will likely ask that questions about its future for the foundry and its roster of the clients going forward, as well as is CapEx spending.
Youkyung, let's take a look at the stock price. Of course, it's fallen just about 40% since that 2021 peak. Let's take a look at this chart showing that they're actually the cheapest in just about 4 years. We've seen that forward P dropping below the pandemic low, and in fact, that 12-month forward price to earnings ratio hitting the lowest levels in recent years just last month. So will investors look at this and think they're finally cheap enough to buy?
So that's a good point. The stock price has become a lot cheap compared with recent years, and a lot of portfolio managers I've met this July told me that they find the semiconductor stocks cheap enough to buy again, and that's why we probably saw it in July. The stock has risen nearly 8%, which is going to be its first monthly gain this year. Now that the stock price of Samsung has been going not as much in relation with this stock with its bottom line or top line gains, but the valuation of the stock has a lot more what matters to the investors at this point as they try to find the cheap stocks in the market.